Good evening, Ira Epstein, and here we are with your Wednesday evening metal market wrap-up, and this wrap-up is for May 24th, 2023, and right now, where are we? We're about 6:10 p.m. Central Time. Okay, so after the market, we saw NVIDIA come out and kick butt, real big earnings, way carrying the market, and that's why you're up in the NASDAQ 185 points. So it'll carry the day there for a moment. It picked up the S&P with it. The Dow doesn't have any of that, so it's down as the Russell is. So that's the reason you're getting the mixed bag. Then we now have to take a look at how the other markets are going. And as you can see, the metals are still in the doldrums. The currency market's fairly still. Now, Fitch came out and warned the U.S. is putting them on a watch. I just wrote yesterday, I can't believe this, that I said it's about time we hear from the credit rating agencies, and they probably are going to give their warnings and then do a downgrade. So now you've got McCarthy, Biden having to deal with, here comes the full faith and credit of the U.S. under attack by the rating agencies. They have to act sooner rather than later because their good faith is there. I mean, they're paid to rate things, and we're in trouble right now. If you saw Mr. McCarthy today again, and Ms. Yellen, okay, because she's now the spokesperson, from what I understand, for the Biden administration, and the spokesperson for McCarthy is McCarthy. And McCarthy is saying they're not going to spend, they're not going to raise taxes. He hasn't changed anything. So I still don't know where the give and take is. But there's an event taking place on June 2nd. I'm not going to discuss it here. Tune into the financial wrap-up for futures. I'll go into it there, and that's going to have an impact. So before I get too far, you had a big rally in the energies. Did I not predict for you that as soon as the Biden administration changed course and said, oh, now we'll buy oil, that it would probably get away from them? I mean, it's just a given. They don't know what they're doing. And boom, away you go down. And I'm not attacking, and I don't want you to think I'm attacking Democrats. I am attacking Biden. I want to be very clear on what I am saying. It's the president. I'm right after him. He runs the Democratic Party. Nobody else is in control of the energy. When he said in October, we're going to buy oil, he should have known that if we couldn't buy it for a lot of reasons, okay. You see what's back here? I'm keeping your attention. Don't leave me, because in just a few minutes, I'm going to show you what we're doing for Memorial Day. Okay. Little trick there, right? All right. When we look at the gold market, I didn't at first think we could make a run back towards that 18-week average of closes, but it's looking like it's a possibility. We're down for the week 1%. So it's so important you understand that the world hasn't ended. You're down 1% in gold. It's well off the highs of the 2085 peak high. You're now on a settlement basis. If this were it at 1961, okay, you're down $100 an ounce from the peak. You see that very clearly here. And you see how the market has fallen into this area that we were at once before. The pattern on the chart changed today. Did you see that early morning short covering spree? I think it happened around 7 in the morning, 7:30. It was right in that zone. I'm just giving from time. It carried the market sharply higher. I frankly didn't know what was going on as I was watching it. I'm going, well, that's interesting. And all the markets were taking off as though maybe something positive had happened on the debt ceiling talks, but it wasn't. But you had a short covering rally, and I swear to you, after it peaked out, the market went down and kept making lower lows on the day. It was one heck of a reversal. I mention this for a reason. Trying to play the short side of this market, you have a landmine in front of you. The landmine is, be it an extension, be it an agreement on the debt, whatever they come up with to avoid the default is a landmine. You're going to get probably a big short covering moment. It could be a day, it could be a week, I don't know. But it's a moment because you've come down so much. Will it hold? That's not what I'm saying. What I'm saying is you got to be careful of it, because you'll say, what the heck just stopped me out of the market? What's going on if you're playing the short side? Obviously, the bottom pickers are saying, well, that's what I was expecting. Of course, they might have been buying up here, and now they're out $70 an ounce. I'm just giving you the examples. Got to be careful right here. When we look at the market, the resistance, if you do rally, I'm going to predict it's around the 18-day average of $2,006. The support is between here, the 100-day average, and the Bollinger Band, which is slipping again. So now what's happening is because of what the market's doing, the Bollinger Band just got back under the 100-week average. So the biggest support for the market isn't the Bollinger Band. It's the 100-week average, which we haven't been at for a very long period of time since March. That is where I'm looking for the market to grab traction. May it not be seen, and might the market from here just rally? Absolutely. You stepped out of the downtrend, as I just said. Are you embedding? Now let's take a look. To embed, you have to have the K and the D lines, if you've taken my embedded course, going sideways for at least 3 business sessions under 20. You can't count what's on the board Thursday, but you can count the close on Wednesday, both under 20. You can count on Tuesday, and you can count on Monday. You lost the embedded reading. Got it? You got the embedded reading right there. Let me walk you through it one more time so we don't lose it. Not embedded there. Day 1 of embedded, day 2 of embedding, day 3. Now we get into today. We already got the 3. So what will the pros do? Well, number 1, if the red line closes over 21, the objective's $2,006.30. That would be the objective. Is the rally getting sold now on rallies? It only embedded now. So the answer is the pros will sell rallies. They'll bail, in my opinion, if the red line closes over 21. And yes, the market's still a short sale, and the objective 1953.10. Do I know if anything positive is going to happen? I don't have a crystal ball. When we take a look at the gold silver, notice how silver's taken a massive beating against the gold market. And the reason, you're down. What did I say here yesterday? I said if you rally, look for resistance now at the 100-day average. Okay, did we miss it? I think we did, but by the skinny, you got by 5 cents, okay? I mean, that rally carried right into what I thought. You are embedded. I think the pros went short today. You've had the embedded reading, and that tells me that they're still looking to see can they get down to the combination of the Bollinger Band and the 200-day average. No change in what I just said. Everything I said about gold for the short covering would happen probably to silver. In fact, all the markets that have taken a beating if we can get an extension or a deal. In the copper market, you finally hit the Bollinger Band again. I think the pros took money off the table in part by hitting that. Now, do you have the embedded reading? You cannot count tonight, so you got to go to Wednesday. Both numbers under 20. Both under 20. Both under 20. So you're embedded. Day 1, 2, 3. You're embedded starting today. So what do I think for tomorrow? Yeah, I think the pros will sell the market. Now, what else happened? Yesterday, I pointed out to you had a bearish crossover of the 100-day average and the 18. The 18 in red, I said 100, 200-day average, sorry. When it crossed, I said you're probably going to go for new lows. You absolutely went for the new lows as well. In the platinum market, down to the Bollinger Band, 100-day average in green. No, I think pros are covering shorts, maybe all of them. You now are not embedded. You've got down to major numbers. What I teach in my course is that would be the spot that you lift money off the table, period. In the palladium market, there's room to go. You might be getting down here. Oversold as could be without question. I don't see traders adding to new shorts because of the oversold. And in the dollar, you have the embedded reading at work. The market just continues to make higher highs. When it hits the upper band, I think they lighten up and then they step away for a moment. Now, you saw what I was saying about Memorial Day. Here's the special you get. For those of you new, let's assume you took one of my research programs, you quit it for whatever reason, you want to return, you're a monthly paid out, not a 1 year paid out, a monthly, going month to month. if you want to pay for 1 year of my research, you can take any of my courses. That's my full charting course. That is the Bollinger Band course and or the Outside Day course. Any one of those you get with it. You can give it away as a gift. You start it when you decide to start it. I don't care if that's after Memorial Day. I don't care if it's after July. Whenever you decide. We have records. We know what we're doing with it. You tell us when. But the research starts the day that you buy it. How do you get this? It's pretty simple. All you do is you move your cursor up to the top here. You'll see a link. Give it a click. It's that simple in itself, all right? So it's iraepstein.com. Go to the website. It's not there. You got to pay for it through here. I did send out an email if you're on our mailing list. It's there. It's a limited time. I won't honor it right after the day that it ends. It's all there in the email that I sent you. It's going to end on the 31st. You only have a short period of time to take advantage of it, and then that's it. Again, any one of the courses, the charting course itself is a $400 value. The morning subscriber video for just futures is $156. I think you're getting a great deal. I'm Ira Epstein. Thanks for watching, and I'll see you in the next video where I want to talk to you about something on Social Security.